Well, certainly you get the impression from the survey of a situation that's easing in terms of bank lending from a very difficult place indeed in the depths of the recession. Members are saying they are getting bank lending in particular, but that it's tending to cost more and require more in the way of security. I have quite a lot of sympathy for the banks because policymakers are asking them to do two things at once, which are virtually impossible. You can either build up your capital base with money, or you can lend that money out to businesses and individuals. You can't use the same money twice. So yeah, I do have some sympathy for the banks, perhaps slightly unusually, but I do. It is difficult, but the good news is that businesses appear to be understanding that there are alternatives now to bank lending. That's things like crowdfunding and peer-to-peer lending. And 1 in 20 of the respondents to the survey tell us they've actually used those sources as opposed to a bank. And by and large, they're reporting very positive experiences. So we think it's a question of, if there is a shortage in the market of lending, the natural market forces will respond by creating alternative sources of lending. And this is what seems to be happening. So again, that's good news. From what we know of the crowdfunding and peer-to-peer markets, they are J-curving in terms of their growth at the moment. It's estimated this year that there will be 4 billion lent out by peer-to-peer lenders to businesses. We think that's a very strong underestimate. We think it's going to be more like 7 or 8 billion that will be lent. Now, in terms of overall bank lending to business at about 160 billion, that doesn't look that significant, but equally it's grown very fast from a very low base, and 8 billion against 160 billion is no longer insignificant.